Dear all, this is going to be a series of daily videos explaining different chart patterns. I request each one of you to understand the concept and choose one or two chart patterns that you find it interesting and suits your trading style. Then try to master those chart patterns and do a lot of backtesting to see the results for yourself. You should then stick to those one or two chart patterns and should trade your next 25 to 30 trades completely based on those selected patterns before you move on to next patterns. So let's quickly get started. So these are the 12 chart patterns that we are going to discuss on a daily basis. Ascending triangle, descending triangle, uptrend, downtrend, bullish peanut, bearish peanut, bullish rectangle, bearish rectangle, head and shoulder, inverted head and shoulder, double top and double bottom. So let's quickly get started. Today's video is going to be on ascending. So in case of ascending triangle, we are going to only look for buys. The first criteria for the structure is, as we discussed earlier, the stock or an instrument should be in an uptrend. So this is the first criteria. Stock or instrument should be in an uptrend, and the stock should start taking support at new higher lows. So for example, in this case, if you see, it should be taking support at the trend line. So on the lower ascending trend line. So here, let's say the stock should be taking support here, then it should take support here. It doesn't mean that it goes here and then comes here. It should take support, otherwise its structure is not valid, right? So as long as this is happening, and then we are trying to see where the contraction is happening. So what essentially here it means is like this is the resistance level. So there are a lot of suppliers here. Suppliers are able to pull the price back, but the buyers are coming at new entry levels and then taking. And these buyers are keep on moving upwards. So for example, this price was, let's say, 715. Now the buyers are at 720. Now the buyers are at 725, and then they are. So basically what it means is buyers are not letting the price fall. At the same time, sellers are not able to drive the price lower because it's going back and testing. So this is the criteria. So this is how the structure will look like. Okay. Now what should be your target area, what should be our entry area? So always, as we discussed earlier also, we will only be looking for an entry on a retracement. So for example, in this case, if the breakout happens, that is what we are assuming, okay, because it's an ascending triangle, it will go up and it should come down and test this level. Let's say it doesn't respect this level, it can go down also, right? Then it could be a fake breakout. So that's the reason we are trying to put our entry here, not here. Once you have taken an entry here, immediately our stop loss should be this level. So this level, for example, let's what we discussed, 715 is the support here, 725 is the 720 is the support, now 725, and this could be like 730. Let's just a hypothetical example. So I put my stop loss because I know if the structure gets broken, this is going to be invalid, right? This entire structure is going to be invalid. So I want to have minimum losses and maximum gains. So what is my range? So the range is going to be the base. So basically base is nothing but the difference between the two lines at the beginning when you spotted this structure. So this is going to be your range, and this is going to be the range will act as your target. So once you have entered this position here, you should be looking for the difference of range as your target. In this case, that's why we have drawn this line. So this is my range, and I'm expecting this price to go up, and I'll book my profit only at this levels, or probably let's say a little below or little. But hope you understand the concept. So basically what we are trying to see is we're trying to go with the flow. At the same time, we're taking minimum risk. And hope you understand this concept. Let's now look into real trades and how the structure works. So let's quickly get started with the trading view. Now let's take a few examples. So the first example here we are going to take is HDFC Bank, HDFC Limited. And remember one thing, it should always be on daily time frame. Okay, let's see how it worked. So you can clearly see the stock has been in an up move and then started to make a kind of a triangle formation. You can clearly see this, right? So let's draw it here. You can clearly see. So this is how the structure looks like. Hope you understand. So this is I have tried to make as many supports as possible, connecting as many supports as possible. At the same time, I've tried to put the resistance. So this is the range that I'm looking for once the stocks gives a breakout. As we discussed, we will be only taking an entry at a retracement. So this is the structure for you. Clear ascending triangle where you can see, although there are sellers here, but there has been a clear spike in buying activities. So you can see here, you can see here. So whenever the price is coming down, the buyers are active and they're trying to move the price up. Although we know that there are a lot of suppliers here. At the same time, once it has given the breakout, we are not going to chase this breakout. We have, as we discussed very clearly, we will be looking for retracement. Once the retracement happens, we'll look for an entry at around 2378. Let's say 2378, and looking for a target of this range. In this case, the range is 320 rupees, which is like 16%. This is the range I'm looking for this trade. So 2378 plus 320 or 300, let's say 350 approximately, right? This is the kind of target that we are looking for, right? Once you've entered this trade, and our stop loss is very clear. We have entered this trade here at 2378, and our stop loss is exactly here because this is the last time where the price tested, which is like 2306. Once this price breaks this level, this structure is invalid, right? Because it is no more ascending triangle. So this is the ascending. So this is how the concept works. So you enter here with a stop loss of the lowest range of the lowest shown range of the triangle, which is in this case 2308. We enter a trade at 2376. Our targets are exactly 320 points above this level, which is like 16%, and this is our target range. So look, you can clearly see what has happened. So we did not enter here, okay? We entered here and then see how it worked. See, so you have been patient enough, and then you get the benefit also. So 2753 from 2378 to 2753. It can whatever can happen afterwards or before, we don't know actually, right? As a market participant, we don't know how the price will act on a certain day. But this is a structure that we want to follow. As long as you follow the structure, you will get the results. But believe me, this could have gone here also. But in that case, had you even entered here, your stop loss is here, right? That is why we need, that is why the emphasis is more on stop loss rather than profit. Hope this is very clear. So let's discuss. So now let's see how ICICI Bank has performed as per the structure. So you can clearly see ICICI Bank has been in an uptrend and then started to consolidate. And let's now draw the trend lines. So you can clearly see there is a support activity which is happening at this level, right? Clearly, you can clearly spot this as a support activity which is happening here. And let's see how the bottom of that particular triangle is forming up, right? So in this case, you can see this is just taking support, right, at lower levels. So what it essentially means is whenever the stock is coming down, the support level is getting increased. This is what it is all. So this is what we are trying to understand this concept, right? So we know that there is a resistance here. There are suppliers here. Last time the stock had fallen. If you can see, it had fallen, but it is taking support. Now in this case, we're just trying to see how the structure is working for us. So this is clearly, if you see from a pure visual perspective, it is clearly ascending triangle where the price is moving upwards rather upwards. That's it, right? It is touching here, it is coming down, it is touching here, coming down, and it's just making new higher lows. This is what we discussed on the concept. So now, what should be my target? What should be my entry? How should I take the trade? So let's look at, so as soon as you spot this trade, spot some kind of activity like this, this is my range that I'm looking at, right? The first time when you spotted this is my range, right? Now once this breakout happens, Like in this case, the breakout happens. That's what we discussed. We will be looking for a retracement. In this case, it happened here. It didn't come here. So this is my new higher low. So I will look for an entry here, right? Now, what should be my target? So the target has to be similar to what was the first initial range, which is like 78 points from. So from here on, I will be looking for a 78 to 80 kind of a target zone. So in this case, let's say here is the breakout which has happened here, okay, and this is the retest level, okay, but I will consider my target zone from here only, right? So kind of 80 odd points that I'm looking for, right? So this is kind of my range. So roughly 20 23 points, sorry, 20 20 percentage kind of a points that I'm looking for. Hope this is very clear. My stop loss level is, again, as I said, this would be my stop loss level because this is where is my last support. So this is my entry level and this is my support level. Not much of a difference. So here I enter at 418, and in this case obviously we enter at about 425, and my stop loss is about 390 kind of a zone. You can little extend it because this clearly, in fact, after the chart you can always say it could be stop loss here, but the structure is valid as long as the trend line keeps on moving up, right? So in this case, that's why we said our stop loss will be similar to this kind of a range. So let's say 390 or a 400 kind of range. Hope everybody understood this concept. I request each one of you to just go back and do a lot of back testing. This is a very powerful concept, ascending triangle. Tomorrow we will be discussing descending triangle, but for today, just focus on ascending triangle. See how it works. It's absolutely very simple concept, and it is more related to price action, how the price action forms and why it is called ascending triangle. So basically nothing but when price moves into a consolidation zone or a narrow zone. So we are expecting some kind of a move upward or downward. So we are not, in case of ascending triangle, we are only looking for upward. This could happen here also. This could happen. So let's say tomorrow the market crashes, it could go down. But our entry points are very clear. Our stop losses are very clear. So that's the beauty of trading with discipline, trading with a lot of risk reward. Hope everybody enjoyed this video.